Hi, it's Preston James. I'm so excited for you to get your hands on the Money Press Method guidebook. It's on its way. It's being shipped to you with the 2 DVDs. I thought while that was happening, I would record some videos to help acclimate you to the Money Press a little bit more and why I'm so passionate about it. I have a feeling you're going to be changing the way you think and invest and trade after you get this material in your hands. And so some of this is some of the reasons why. So we're going to cover 3 main things in this video. One, and you've heard the 2 certainties of life. There's actually 3. We all know that death and taxes are the 2 certainties, but the third one is the time decay of options. This is so key and is going to be it's a key part of like the video you watched when I showed my account and how it grew in such a short period of time. Time decay of options is huge. 2, we're going to talk about why the Money Press works and why it's such a consistent moneymaker. And 3, why we can all make money with it. That's key. We can all make money with it. I call us, you and me, I call us usins. And we can all make money with this. And so we're going to dive into number 1. All right, number 1. As sure as death and taxes are a reality for everyone, the other one right up there is the time decay of options. Options have a shelf life. They're going to expire one day. And with the Money Press, we're going to use that circumstance to our benefit. And wait till you see the advantage with weekly options, which is a part of the Money Press. It's the big breakthrough going on. So the time decay curve, it's not a straight line, but options expire kind of like this, and toward the end, toward their expiration, they really fall off. And what you'll be learning in your Money Press Method guidebook is when we become sellers, consistent sellers, and this is like 1 week to go, when we sell options that have a week left, the time decay is really falling off them. And again, we're using this circumstance to our advantage over and over and over again. Now, in another video, I talked about Baskin-Robbins, and their commodity, of course, is ice cream, and they buy the big 5-gallon drum of ice cream, and then they get about 100 singles. They might buy that for about $30, but they can sell 100 singles for like $3.50. There's a huge margin there. They're dealing in ice cream. The Money Press Method will deal in time. We're going to be buying time in bulk, and we're going to be sellers of those single ice cream cones. So what the Money Press is, the option world calls it a spread. And we're dealing with options. In this case, the Money Press, we're dealing with put options. And we're playing a game, if you will, with how time decays. And we're going to be buying options and selling options, and that's what a spread is. And the ones that we buy have a time decay curve that favor us because it hardly drops off for a while. And what we'll be doing along the way is continually, look how the time value drops off in big ways in that final week. So a big part of our Money Press is selling weekly options and collecting a really big premium, as I'll be showing you in a minute. And we're going to be having sleep at night protection by the options that we buy that have a very small time decay curve for a long time. Now, if options are new to you, I know this can sound a little intimidating, but I promise you when you get your book, the Money Press Method Guidebook, it's going to explain this more. So don't make this more overcomplicated than it has to be. It's ex-linebacker approved. And this next part I want to show you is super exciting. So check this out. I'm going to put some slides up on the screen right now. These are 3 stocks. One is Apple, MasterCard, and Roku. And what I want you to notice is the price of the 1-week option, and it's the same exact option, meaning the same strike price, but we're going to compare the 1-week premium to the 1-month premium. And look at that in Apple, it's over double. So check this out. In a Money Press, we're selling the weekly premium. And look at the weekly premium on Apple, $2.37. Multiply that by 4, because there's 4 weeks in a month. And we're getting close to $10 in premium. Compare that to the 1-month premium in Apple, which is $5.05. By selling the weeklies, we double our income. Look at it on MasterCard. You're going to freak about this one. The 1-week premium is $3.90. So that's like close to 4. So 4 times 4, $16 in premium. Look at the 1 month, the exact same option, but for 1 month out on MasterCard, it's $7.25. That's more than doubling your income by selling the weeklies. And then Roku. The 1 week out premium, $4.05. Again, this is money you collect. This is money we receive. For one contract, by the way, that's $405. It's not $4.05. That's just how it's quoted. And the 1 month on Roku is $7.90. So by selling 4 weeks of premium, week after week after week after week, 4 that equal a month, that's $16 a premium in 1 month for Roku, rather than the old-fashioned way of selling the 1 month out, which is half of that amount. This is the game changer, and this is why the account I showed you, a real account, explodes up in value so much over such a short period of time. Now that math is downright exciting, and if you're $3,000 to $5,000 a month away from being able to retire, you can see how that weekly income can come in and start plugging that hole and filling that gap for you. Now let's move on to the point number 3. So people inevitably come up to me and ask me, this is working so well, what if everyone decides to do this? Is it going to ruin it and take all the profitability away? The answer is absolutely no. The big reason why is there's an 80-20 reality out there in the world today. 80% of the stock market volume you see is done by institutional sized investors. We're the 20%. So it doesn't matter how many of us do this. And I liken it to an oil tanker versus a wave runner. And the picture you're seeing right now is an oil tanker that's pushing water around in the San Francisco Bay. And imagine, dozens of those. These oil tankers are the big, huge institutional investors. And guess what? There's other circumstances. Interest rates are artificially low. Money can't really go play anywhere else but the stock market. And it's these big institutions pushing all of the water around and creating volatility. And that's where those premiums, that's why they're so big on the weekly options. And again, we're managing circumstances here to collect those weekly premiums. And guess what? This is never going away. And it just does not matter how many other people do it. Well, I hope you found this video fun and helpful. We've covered 3 important things. We talked about the 3 certainties of life: death, taxes, and the time decay of options. We talked about why the money press is such a consistent moneymaker, and also why it doesn't matter how many people decide to do it. Now, in the video you're going to get tomorrow, I'm really, really excited about this. I'm going to pull back the curtain and show you a real money press example on one I just barely got in. We'll walk you through so you'll know all the different steps on how to get one started yourself. Don't miss that video.